You're very welcome to another episode of the Corporate Governance Podcast, brought to you by the Corporate Governance Institute, providing quality education for the next generation of directors and other corporate leaders. This podcast is about exploring what's new in governance, the challenges, the opportunities, and how we make the most of them. I'm your host, Dan Byrne, and I'm joined today by Muddy Ramrakha, impact investor based in Nairobi, Kenya, with many years' experience in corporate leadership. Muddy's career includes highlights such as Vice President and Executive Director at JP Morgan, as well as being a member of the Green Angel Syndicate, a UK-based investment syndicate specialising in the fight against climate change. Muddy is also a recent graduate of CGI's Diploma in ESG. And Muddy, thank you very much for joining us. It's great to have you here.
Thanks, Dan. Very much appreciate the opportunity.
Well, let's dive straight in, shall we? And I'd love to start at the beginning. If we could just learn a little bit more about you, could you briefly tell us about your governance career and what drives your interest in it?
Sure, that would be great. Actually, my volunteer career started in secondary school and continued throughout my career. I'd spent about 30-odd years doing board-level service, from the committee to sitting on boards of trustees. So it's been a fairly lengthy career. I'd say that a lot of the technical skills built up leading to that was driven by my 5-year career in public accounting, which gave me a lot of multi-sectoral exposure to governance matters for startups, to global corporates, to not-for-profits. Following that, I had a 19-year career in investment banking, which gave me, I would say, unparalleled exposure to challenges in implementing relevant governance principles, particularly for frontier markets where faced by institutionalized corruption, dysfunctional governments, and lack of transparency. And then fast forward my recent 10-year career as a company director for my family office has really helped cement some of the need for sound governance, especially in preserving and growing multi-generational wealth. So that and a backfilling of practical governance skills with the formality that didn't exist during my 35-plus year career. As you mentioned, I completed this CGI's Diploma in ESG in 2022. So that was a great crystallization of knowledge. The practical experience was great to be able to apply to the theory that comes with it. Around my interest in governance, it really derives from kind of a childhood guilt from growing up in relative privilege while being surrounded by destitute poverty. So I did a lot of volunteer work that would otherwise be provided by public sector or private sectors, and developed a strong view that, we need to create sustainable models for not-for-profits to survive all of the inevitable funding challenges, to achieve scalability, and really ultimately outlive the donor fatigue that tends to set in over time. So there's a long history of the difficulty for non-profits in accessing and affording functional expertise in areas such as finance, HR, legal, regulatory affairs, technology, or even professional governance skills. So I think that I felt very valuable in those settings, being able to bring a skill set at a relatively young age and being able to add value. Then I think in a family office setup, observing generational wealth be squandered due to the poor governance, that drove a lot of further interest. And then in the corporate setting, as well as in the not-for-profit setting, observing greed and groupthink and vested interests undo everyone from small to global corporates in some spectacular cases that have come to light, especially in the last 15 to 20 years, when pure economic interest supersedes the broader stakeholder interests. So in summary, I think these were some of the defining factors that drove my career in governance.
That is a hugely impressive resume, Muddy, and it actually crisscrosses over a lot of the different dilemmas that we would face in governance today in terms of, managing finances and managing all the different expectations of stakeholders. And I'm particularly interested in your history with nonprofits. And this is an area that I'd love to get more into with the podcast today, because governance in nonprofits, that's quite a unique area. For anyone listening who's on a nonprofit board or thinking of joining a nonprofit board, what are the main differences in this area that you see, given your history?
I'd like to preface this with kind of my perspective that I find the lines starting to blur a little in the recent past, especially as for-profits have to become much more conscious of their broader stakeholders, and not-for-profits are having to become more commercial as they struggle with some of the funding challenges, so having to develop and diversify funding sources. So I'm starting to see, especially in the last 10 to 15 years, a slight blurring of lines there. However, to answer your question, I do see the key areas of difference as being things like the purpose of for-profit versus not-for-profit, the funding models that they tend to deploy, the audiences that they serve, the leadership cultures within a for-profit relative to a not-for-profit, the culture in those different settings, the tax structures, obviously, that drive the not-for-profit legal entities, the staffing models, the ownership structures, and the accountability. And I think it might be valuable if I give some examples to illustrate this point. One would be really, if you look at what a for-profit is relative to a not-for-profit, the for-profit is really just there to make profit primarily, and has been for decades until the recent past, when a broader stakeholder interest is starting to develop, driven by investors as well as employees and customers. The not-for-profits, by definition, have always been designed to serve broader societal interests. If you look at their motives, for example, they are driven by profits to serve shareholders in a for-profit versus a service or a societal impact for a not-for-profit. If you look at the legal structures in which these organizations function, for-profits could be a sole proprietor to a corporate partnership or a company limited by shares, for example, whereas in not-for-profits, you would find things like social clubs, trusts, like hospitals, public hospitals, societies, or companies limited by guarantee, which is a fairly recent development in corporate structures that give them a corporate structure with a social purpose. So there's all sorts of evolution happening in that space. If you look at management, for example, management could be much more hierarchical in a for-profit versus being much more driven by trustees or committees or governing bodies in a not-for-profit. So you've got different structures there. Sources of revenue, for example, could generally derive from sale of goods and services in a for-profit, whereas in a not-for-profit, you've got a lot of donation-based or subscription-based or membership-based fees. And again, this is an area of evolution where the sale of products or services helps supplement some of the donor revenues that tend to be quite restricted in their use. So that's where you'll start seeing some convergence. If you look at the way not-for-profits are started, a lot of them tend to be started by initial founders or funds from donations or subscriptions or government grants, whereas in a for-profit, you'd have capital contributed by the owners themselves. Another key difference would be around the financial statements. A typical for-profit that people would be familiar with would be income statements or balance sheets or cash flow statements, whereas in a not-for-profit, a lot of those tend to be less relevant and focused on receipts and payments accounts or income and expenditures because they can only spend what they've earned, and a balance sheet of assets and liabilities. And I guess one last example would be any money earned over and above their expense base in a for-profit would be transferred to a capital account in a for-profit organization, whereas in a not-for-profit organization, you're going to have what's called a capital fund for a rainy day. And that's how lots of universities and large not-for-profits develop big endowment funds for investment purposes.
Very colourful, very in-depth, and I'm loving this. The one thing that I did want to, I thought we should touch on before we move on, if you could briefly explain the term, because I know you've said that, one of the unique challenges for nonprofits these days is the structural and funding model. And you mentioned the term restricted funds, and I think it might be helpful just to explain for those who might be starting out in the nonprofit sector, just very briefly, what does restricted funding mean?
Sure. Actually, thanks for pointing that out, because a lot of donors have very specific criteria on how the funds that they donate to an organization have to be used. And that's what you would call a restricted fund. For example, many donors would specify that no more than 10 to 15% of the funds that they donate can be used for administrative purposes. Substantially all of it has to be applied to the program that they are funding. So the intent is to make sure that the impact is delivered and as little as possible is applied to the overheads of the not-for-profit.
Do you think, just in your experience, that there is an increase in the desire for restricted funding?
Yes, because, the larger the not-for-profits get, the more overheads they start to incur. But what's very important in the leadership of not-for-profits is maintaining a very lean overhead structure, and that kind of their staffing models, their occupancy costs become more sophisticated in allocating them to the to the programs that they are delivering, and only the core overhead remains. Let's face facts that it comes down to creating a level of sophistication and recording of expenses and allocating them accurately to the programs being delivered. And the competition among NGOs or not-for-profits for the funds really start requiring them to be very clear in how those funds are being used, because those funds tend to have a 3-year life cycle and will move to the more efficient not-for-profits if they can't demonstrate impactful usage.
Thanks very much for that. And I'm going to move on to the next question, and it's basically us putting ourselves in the mindset of someone who might be thinking of joining a non-profit board. What would you say are the biggest rewards for individuals serving on boards like this?
Fantastic question. Thanks. So I'd say that the key rewards I see tend to accrue much earlier in one's career in a not-for-profit by virtue of the long time lag it takes to achieve the same level of experience in a typical corporate setting. It can take someone decades to reach the sorts of levels that one can achieve in a not-for-profit by virtue of applying one's experience, one's life experience. Let me give some examples. To be able to demonstrate and develop leadership skills early in one's career, to think more strategically, develop professional skills that maybe someone doing a narrow scope job wouldn't otherwise get to experience in a corporate setting. Making very important connections that come from the diverse pool of talent, improving one's financial management skills because you've got a smaller microcosm in which to manage simpler budgets, if you will. The benefits that accrue from having a diverse pool of passionate people to draw upon and enrich one's experience. It really helped, I found it helped me identify my strengths and hone them by doing this volunteer work that I didn't get the scope to demonstrate in my corporate job, for example. To participate in creating positive public relations for the impactful work being done by the for-profit, the not-for-profits, and really getting out of my comfort zone with things like fundraising and asking people for money and developing very impactful outcomes. That's something that really allowed me to step out of my comfort zone with at a much earlier stage of my career, especially with the larger for-profit, not-for-profits, the intrinsic rewards that come with being in a philanthropy environment and having the prestige of a title like a board trustee earlier in one's career than one would otherwise be able to achieve.
Now, wherever there are rewards, there's bound to be challenges as well. And given the unique nature of non-profit boards, I'm sure the challenges are quite unique as well. Could you give us any insights as to what you think the biggest challenges are when you're serving on a non-profit board?
Yes, you're very right. I think my list of challenges is probably much longer. There's a garden variety of issues. I think the perennial challenge of funding always comes into play, especially in developed markets. Now we're seeing less and less government grants available for non-profit organizations. And by comparison, having spent a large chunk of my life in frontier markets, there is absolutely no funding for non-profits. So it's very dependent on private donors or communities to develop funding models. Take the challenges of instability of annual income. One never knows how much one is going to be able to raise. So it becomes very difficult to budget the expenses and maintain the kind of the spaces and overheads and the people and commitments to programs when funding is such a challenge. There's also growing pressure from donors to demonstrate impact and how the money is spent. So the growing sophistication of the donors requiring the same sophistication in use of funds is an increasing challenge. Then what that implies is that if a nonprofit isn't running like a business would, with good checks and balances, workflows, processes, and so on, they start to perish because the donors get frustrated and move on to causes that can demonstrate those capabilities. Likewise, attracting and retaining talent, which is already a challenge in the for-profits, it's an even more acute challenge for not-for-profits because they're competing without the ability to offer compensation. So tugging at heartstrings for the passionate people driven by the cause tends to be their kind of source of leverage, if you will. And I think one of the challenge is in this recent cost of living crisis is that nonprofits are experiencing an exponential increase in demand for their services and with a lesser capacity to actually deliver against them. So that has been an acute challenge for many not-for-profit. Let's talk about board governance, for example. Achieving cohesiveness at that board level of a nonprofit where you've got so many diverse and passionate people with differing skills and abilities, it becomes a very big leadership challenge for a group of volunteers. In a for-profit, one can motivate with the stick or carrot of compensation. That leverage doesn't exist in a non-profit setting. The diversity and accountability culture when you've got volunteers is also a challenge to maintain as a leader of a non-profit. Then developing a culture of trust when you've got so many varied interests becomes very difficult, especially when you've got controversial topics to manage. An important area of growth is really around risk management, whether it's things like integrity and accountability when there's been spectacular cases of misuse of funds or, technology risks and so on, are testing a lot of boards that don't have those skill sets. There's the element of board succession, especially where you've got many boards, established ones with 10 plus years of experience, and then you've got newer boards that have a lot of turnover. So you need to balance that very carefully so that you don't lose the institutional knowledge and you're able to draw upon it and keep the boards fresh at the same time. Then I think the one thing that I find incredibly intriguing is how charitable giving has evolved over the years. In my 35 plus year career, between baby boomers, the millennials, and Gen X to Gen Z, giving has transformed quite dramatically, and even seen that in for-profits where kind of societal giving has transformed from corporate social responsibility to integrating ESG into the DNA of the organization. So charitable giving is very much transforming in that space. And then finally, I would say that technology has had a transformational impact, positive and negative, in the nonprofit space.
Can I take you back to the comments you made about this sort of critical time for nonprofits, essentially that they're being asked to do more with less money and increased oversight? Just briefly, and this is crucially just your personal opinion, how critical do you think the next 5-10 years are for the nonprofit sector and nonprofit governance to navigate through this?
Absolutely critical to evolve their survival models or their longevity, their sustainability is very much at risk because with the disappearance of government grants, in many cases with corporate philanthropy, pots of money shrinking, there's much more competition for the services, especially as governments start to scale back on a lot of the programs. And that's exactly the gap that non-profits tend to fill, is a gap that neither the public sector nor the private sector are filling. So there's definitely an increase in demand, and the funding models have to become much more creative. And thus, my view around the disappearing lines between for-profits and not-for-profits. So for-profits are having to take much more attention to their broader stakeholder communities, whereas non-profits are having to develop products and services that they can sell for a fee in order to survive, because those donor sources are few and far between, and the competition is growing, and the restriction around the use of funds really tends to strap a lot of their budgets.
I'm going to turn to ESG, environment, social and governance. This is a big topic in the for-profit world, indeed the world in general, and the casual observer would assume that it's also incredibly important to non-profits as well. How do you see this? What's your take?
It's a topic I've become incredibly passionate about, just because I see governance as just one element of ESG, which is environmental, social, and governance. And integral to all of this ESG focus in recent past is really identifying all of the relevant material issues, whether they're environmental issues or social issues or governance issues, that are important to the organization and its broader stakeholders, not just its shareholders. And then creating goals and targets to address these issues and develop tracking mechanisms of how the organization's goals and objectives are being met, so that they can accurately report without being considered to be greenwashing, for example. So governance is one point. As well, we were just talking about some of the challenges, the relevance of the organizations. For an organization to remain relevant over time, especially in a crowded market, a lot of them have to embrace ESG broadly, because they can't just talk about society and the governance challenges. They have to walk the talk and embed them within their own organizations to remain relevant in this converging world. If you look at the UN's 17 Sustainable Development Goals, or SDGs, I think this is where nonprofits have a unique leg up from for-profits, because a lot of their vision, mission, and values are distinctly aligned to these 17 SDGs, at least many of them, and their inherent ability to do the monitoring and evaluation that they have to do on the use of funds gives them a leg up from the for-profits, who are only used to reporting on economic measures against a profit and loss statement, for example. Whereas looking at non-quantitative measures is a unique advantage of how non-profits have had to govern themselves for many years. I'd like to draw on a recent area of focus you hear a lot about in the press lately, which is around diversity, equity, and inclusion. And a lot of organizations that don't focus on diversity of their workforces or across their supply chains even, and be equitable in how they manage all of it internally and externally, and the inclusivity that goes with that, they risk making themselves irrelevant, especially if you look at the value system of a typical Gen Z recruit that values that over compensation, for example. So these factors are becoming very, very relevant for the relevance of the longevity of these organizations. And I'd like to illustrate one point around the lines blurring between for-profits and non-profits, and that's around the concept of benefit corps, or B corporations. And B corporations are essentially a typical company with a social purpose. And the way they do that is by embedding the ESG principles into their articles of incorporation. So for-profit is saying that if once we embed it into our articles of incorporation, it doesn't matter which leadership team or management team comes in, they have to follow this triple bottom line principle of delivering profit, delivering benefits for people and the planet. And not-for-profits that want to diversify their funding sources also set up as B Corps, because it gives them a corporate structure with which to raise revenue and even create separate structures between their not-for-profit work as well as their profit work. And there's one of the organizations I currently serve on the board for is exactly that. It's a not-for-profit with a for-profit enterprise baked in, because we take investor money for the profitable work and we take donor money for the work that no public sector or private sector would otherwise invest in. So there's a lot of transformation in how these models are evolving, and it's creating a lot of unique demand for skill sets to manage these evolving structures that have existed for decades. And then one topic I'd like to bring up is around ESG investing. If you look at some of the largest not-for-profits with enormous endowment funds, especially in the US, you see this a lot, where they've got multi-billion-dollar funds. And now most of their investment committees are required to put them through ESG criteria and do positive screening or negative screening against these ESG criteria. For example, negative screening would be things like not investing in arms dealers or not investing in tobacco or oil and gas or fossil fuels, for example. And positive screening would be things like investing in renewable energy or sustainable water infrastructure or so on. So there's lots of unique developments going on in that space.
Many in both nonprofits and for-profits are just looking for the benefits as you described. Maybe very briefly, let's just touch on what the benefits of ESG are for nonprofits.
I think the benefit across the board is really around transparency and how it adds value, because a lot of donors struggle with gaining that transparency, whether it's on the impact that nonprofits achieve and being able to demonstrate that impact. Let me give you an example from this nonprofit I serve on. We provide a sanitation service and how to demonstrate the impact of how many people are served by a toilet in an informal settlement where toilets don't exist. So those are non-financial metrics, for example. I think the second element is really around thought leadership and greater social credibility that comes from embedding ESG in the organizations, because the donor community is under that same pressure. So aligning those values between the donors and the grantees becomes that much more critical. And the more like-minded you are with the donors and the volunteer base that comes there to satisfy passionate cause, the better off the nonprofit will be in the long term. And then the growth of collaborations and partnerships. No entity can operate as an island anymore. Those days are long gone. So the need for collaboration and partnerships is that much more critical as things like new technologies and social media and artificial intelligence kind of demand that one creates those partnerships to survive.
And let's flip it over again, because we all know that there are challenges when there's benefits, and for nonprofits as well. What do you think are the biggest challenges? Someone sitting on a board, what's going to be their hurdles to try and jump over?
The biggest one I see is kind of creating an alignment between the values and the impact that these organizations are achieving. And a lot of the organizations are having to relook at their missions and either taper them based on their funding challenges, or the ones that have the capability of generating the funding sources, scaling their ambitions to serve a broader community. So you're seeing an upward pressure, downward pressure, and it's really about creating that agility to be able to serve the communities they have effectively. Then, as mentioned briefly, was around enhancing transparency and attracting corporate donors as public sector financing sources start to dry up, and being able to appeal to the corporate donors, because corporate philanthropy tends to be much more aligned with either a CEO's pet projects or a foundation that has very specific criteria. So aligning to those criteria becomes that much more critical. And finally, I'd like to say that in this space of challenges, connecting with Gen Z, to be able to really appeal to this future demographic of leaders becomes absolutely critical, because as the millennials and Gen X to Y start retiring away from this, that Gen Zs have a very different value system and different leadership style and different mechanism of seeing philanthropy. So we need to kind of, as leaders, we need to evolve with that model of those thought processes.
Would you be able to sum up in a few words what those values are for Gen Z?
I see this a lot with kind of my nieces and nephews, for example, and a lot of kids that I tend to mentor. It's really about not caring whether they have food on the table. They would much rather starve than be part of an organization that they don't feel aligned with. To illustrate an earlier point I was making, that they wouldn't hesitate to drop what they are doing if they didn't feel like they were being valued, if they didn't feel that they were learning or growing. And they do not see the point of waiting 20 or 30 years or working till you drop dead to achieve a certain kind of aspiration. I think it comes from an era of instant gratification driven by social media and so on. So I see a lot of these values, and I think if we don't take them into account, we do so at our own peril, because those organizations start to become very irrelevant to that demographic.
I guess that would raise challenges in itself, wouldn't it? If, you know, a cohort of citizens who value the sort of instant gratification angle towards life, how do you balance that with what I presume is a lot of different projects and nonprofits that would take a lot of time to come to fruition in the traditional models?
Patience is hardly one of the virtues. However, I think it's a very difficult balance to strike.
And we'll probably see how that plays out over the next 10 or 20 years or so. But I do want to move on from ESG, because ESG is, of course, just one of several issues facing boards today, if you can believe that. Another huge issue is developing technology, artificial intelligence, and that's hit the news big time in the last 1 or 2 years. So what's your view on how this big global shift will impact governance responsibilities, specifically in the nonprofit sector?
I think I'll break it up into two sections. Social media has been around a long time. So social media, I'll touch briefly, has really transformed how nonprofits have suddenly been able to achieve platforms to get messaging out, to develop funding sources by leveraging these platforms. You've seen entire riots break out, of protests form all through social media channels around causes that are important to people. So social media has really had a transformational source, a kind of transformational effect on how nonprofits function, and their ability to scale and reach audiences globally, even for a relatively small-scale organization. Then, likewise, the challenge of an organization's downfall when such social media is misused. So, there's always two sides to that. Let's talk about the bigger topic around artificial intelligence, or AI. So I'm going to break this down into a couple of different elements and do a few explainers in the middle. So if we look at kind of artificial intelligence, I'd say there's about a couple of emerging technologies. Let's look at large language models. Most people have heard of ChatGPT or Bard. These are quite widely used in the nonprofit circles. And for example, things like writing a thank you letter, having to send that out to hundreds of donors to encourage future donations. Now, you can use ChatGPT to do that, but is it going to sound authentic? So there's all sorts of ethical questions around how those large language models come into play. Then, there's elements around machine learning or deep learning. And one of the challenges with nonprofits having very small staff bases with any level of technical knowledge is they can leapfrog that lack of technical knowledge by leveraging machine learning and take huge, enormous data sets and analyze them for donor behaviors and use this technology that is open source and be able to target their fundraising campaigns by way of example. However, the careless use of it can also be incredibly dangerous, especially in an era where data privacy, GDPR rules, all those sorts of elements can trip one up very easily. If you look at AI automation, for example, that can help nonprofits with very kind of limited support functions. They can help automate a lot of these functions using AI, and things like customer service or tracking expenditures with the restricted funds that we were talking about, being able to automate a lot of these functions and be able to provide the types of reporting that the donors require in a much easier fashion and much more repeatable fashion, if you will. Then there's technologies like blockchain, which most people would have heard about, and that creates an immutable ledger to track financial transactions. So imagine all of these restricted grant expenses, and if you've got a blockchain technology, the money comes in and you've got a very strong ledger that's tracking how that is spent. It gives donors a better sense of how the governance of that money is being managed. Another area is artificial intelligence applied to the Internet of Things, if you will. So things like constant monitoring or management, and the monitoring and evaluation function, for example, is a significant challenge, and it's an overhead for most of these nonprofits. So being able to leverage the Internet of Things to integrate a lot of disparate technologies, if you will. Then virtual reality, for example, being able to help donors visualize the theory of change that nonprofits are out to demonstrate impact. So being able to use that as storytelling tools. Storytelling is an incredibly powerful mechanism to attract donor funds, and being able to leverage these tools. So these are just some of the evolving technologies that are incredibly transformational to overcome some of the challenges that we had talked about earlier, whether it's fundraising, recruitment, and so on, and donor fatigue, for example. So the ability to overcome a lot of those challenges. And I think I'd like to summarize by saying that AI can really help democratize access to deep technology that would otherwise be kind of restricted to corporates with deep pockets or governments with deep pockets. And, these open source platforms that social media and AI provide really help democratize access that these not-for-profits would never be able to dream of accessing. And what is the objective of all of that? It's to be able to raise more money, spend less money, target donors more specifically and personally, and then save your time on data management and campaign planning activities, and then reducing the cost of fundraising. As I mentioned earlier, keeping overheads low is kind of the holy grail of delivering greater impact. So I think AI and social media really have that potential if used responsibly. And that is the holy grail of and a lot of the debate in this sphere today is around the morality of a lot of these technologies.
Yeah, the tagline of "please use responsibly" maybe should be the tagline in front of all AI-driven activity. What I was wondering was, we've got a huge amount of opportunities with technological development in AI. We also have a huge amount of challenges. There's responsibilities there that you need to be aware of if you venture into the world of AI. My question is, this is the $1 million one probably, how critical is it that the boards of nonprofits have the expertise to manage these challenges and responsibilities? And do you think that those skill sets are available for nonprofit boards? Or is that a huge challenge that they'll have to deal with?
I'd say it's a huge challenge even for profits, even in the public sector, and especially for nonprofits. So I don't think it's unique to nonprofits, but it's that much more difficult to attract that skill set. It takes a lot of passionate people to make nonprofits work, and it's about attracting those skills. And let me use the same example I would use in a for-profit setting. In a for-profit setting with a lot of elderly board members with very kind of at the risk of sounding rude, a lot of them have struggled with some of the basic technology developments, including social media. So AI is going to be mind-boggling for a lot of them, as it is for me. So it's about surrounding oneself with importing that talent that may not exist. It's about recognizing the gaps within the board. And, as I'd spoken about earlier, a lot of boards often lack basic functional skills in HR or legal or finance or, technology. And it's just yet one of those deep disciplines that one needs to either buy into or bring in as consultancy or to develop enough knowledge to be able to govern effectively. So I think it goes across the sectors, and the sooner boards across these sectors realize the transformational effects of these skill sets, the more relevant those boards' governance structures will be to sustain the organizations in the long term.
Yeah. And in the meantime, it absolutely adds another dimension to that, I think, competitiveness for nonprofits specifically to find top talent that maybe would be lost to the for-profit sector.
Absolutely.
Well, listen, we're almost out of time, but as we come to the end of the podcast, Muddy, I would love to just know your key takeaways about what we've talked about, governance and nonprofits, ESG, and technological advancements. So with that audience in mind, do you have any just advice for the present or the future governance professionals in this space?
Sure. I think it's a lifelong learning journey. And so I believe that governance is becoming a lot more professionalized beyond the friends and family that dotted a lot of boards for many decades and kind of trusted advisors that without the necessary functional skills. So I do believe that governance is becoming a lot more professionalized across the spectrum of public sector, private sector, nonprofit organizations. I do believe that ESG needs to be kind of embedded into the DNA of the organization. And if we don't start embedding it into the curricula from a young age, it becomes an afterthought that is going to be a difficult catch-up. So I really strongly believe that when I do training courses at universities and high schools, kids tell me, why is this not in my textbooks? Why am I having to hear about it in an evening session or a meal? So the kids have the appetite and they are the future leaders. So we do need to embed that. I would say also that approaches to governance definitely vary by geography. For example, if you look at the US, which is very prescriptive around governance with the stick model of these are the rules, you shall follow them at your peril, follow them or perish. As opposed to the principles-based rules, whether it's the Charities Governance Code or the Corporate Governance Code in the UK, you've got a much more principles-based methodology that leaves room for judgment and so on. So those approaches do vary, and there's lots of kind of approaches in between. So I think we just need to work within those contexts of the laws and regulations and develop sound governance structures. And kind of at the risk of sounding like a promotional plug, what CGI's diploma in ESG and all of these training courses and CPD courses offered, for me, have been invaluable in crystallizing stuff I've practiced, but never quite had the frameworks against which to put them. So I think that boards have a responsibility to backfill, especially established boards have a responsibility to backfill those technical skills, and younger people can be attracted when they feel like they develop the confidence through these training curricula. So it works both ways of kind of backfilling the skills in more mature boards and developing the skills from infancy with younger boards. So I do feel that is a critical evolution that needs to happen. And then I guess my parting wisdom would really be around authenticity and integrity being embedded into these board governance structures, without which everything else is just process and procedure and rules and regulations. And there is no lack of challenges for the boards to face. So if the founding principles are unsound and don't have integrity and authenticity as their core foundation, then, and if one doesn't have that moral compass, then it's very easy to veer off in all sorts of directions. And I think AI is demonstrating a lot of that today.
Great parting advice, Muddy. Thank you very much. We're going to leave it there for today. Thanks again, Muddy, for giving us a flavour of what it means to govern a non-profit and how unique that task is. And that's it for this episode of the Corporate Governance Podcast. Join us again for the next instalment. In the meantime, if you're looking to expand your leadership career, quality education in corporate governance and ESG, check out the corporategovernanceinstitute.com and explore the many opportunities we have on offer.